All right, what is up? So today I'm going to go over my trading strategy and how I trade gold and how you could also trade gold. So the first thing I like to do when I come to the charts every morning is I go into the daily and I try and see the overall trend. So overall, right now we can see we are bullish. We're going from here all the way up to here. We had a bit of a retracement and we can see rejection happening here. So yesterday we did close bullish in the end. So this previous resistance area has now become a support area. So with that in mind, I would like to see my next zone that we could possibly tap into. So we could tap into this zone here. This could be another small little resistance area, and it is about how many pips away? It's roughly about 160, 150 pips away. Or I could have my resistance up here because there's another resistance here. So yeah, so the first area I would look out for when I am trading it would be this area here. So this is my first area of concern. And also I am going to place another line here, just here, because this would be the daily flip area. So the daily flip, it will let me know when the daily candle has flipped bearish or bullish. So I'm just going to write the flip here. And whenever I see price above this line, I'll know the daily candle is bullish. And whenever I see price below this line, I'll know the daily candle is bearish. And what that does is it determines the overall bias for me. So if it's above, I'll say, okay, we're good to continue for buys. And if it's below, I'll say, okay, we could possibly see sales coming in and a wick fill idea here. So now if we pop down to the hourly and let me place some candles out. So this is our daily flip. And let's go down to 6 a.m. Oops, 2. So that's 2, 3, 4, 5. All right, 5 o'clock. Let's go one more candle, 6. Yep. So we can see price did in fact push up. So we pushed up, create another little resistance area here. And let's pop down to the half an hour time frame. So generally I come to the charts at 6 a.m. every morning, 6 a.m. to 6:30. I do my charting, and after I've done my charting, I look for areas where I would look for possible continuations of the trend. So as you can see, price is above the daily flip level. So overall, I am looking for buys. So since I'm looking for buys, I've got my resistance here on the 30-minute. So I'm going to move my resistance down a bit because this area looks a bit better to me because we have one tap here, a few taps here. So this is a better area, and this is would just be an area of concern for me. And I wouldn't look for sales unless we go below. I'd say below here, just on the safe side. Below here would be better for sales. I know people can say, okay, we can retest it down to here and so and so, but when you go against the trend, there's a high chance for you to be caught out in fake outs. So now let's play some more candles. All right, so here we have half an hour creating a support. So we had a chance to break down and come back to this area, but we didn't. And instead we created a bullish support on the half an hour time frame. And this is pre-London. So with pre-London in mind, I could possibly take an entry to continue for trend and carry on going bullish. So my entry and my exit would be 10 pips after 10 pips. So 10 pips would be, it would be a bit above a wick, probably say a wick fill up to here. But Just to be safe, I could wait for a bullish closure above resistance or at resistance, or I could take a entry now once this high breaks, saying, okay, we're gonna continue up to retest this area, which is about 20 pips away. So with that in mind, we will look for the next candle to respect this low and to break this high. And there you have it. We got a nice breakout trade or retest trade. So we broke above this candle. We went up 18 pips. So if anyone entered a position here on the break of the highs and you kept your stop loss below the current candle, it would be a 15 pip stop loss and a total of 20, oh, not 20 pips, that would be a lie. It would be actually a 20 pip move. Well, I would of course close partials at 10 pips. So 10 pips is only up to here. I'll close about 80% and let the rest run. And while the rest is running, I will take my stops to break even. So it becomes a risk-free trade. And if it's a risk-free trade, it's just no money on the line, and you just let your runners run. So you could have your TP here, overall TP here, or you could have your TP up here. So let's see what the next candle does. And yeah, it smashed straight through, and we've actually had a breakout. So this was actually at 8 a.m. and 8 a.m. is London Open. With London Open, you can expect good volume to come in. And this was a pre-London trade, an hour before London Open. Hour before London Open, you do get decent volume and indication of the direction the markets are going to go in. So I do trade from 6:30 up to 9 a.m., 10 a.m., which is London time. And in total, if you did hold this trade, it would be a 60 pip move. So now we move on. And now some people may say they want to take an entry above this candle. It would be a bit more risky because we already had a huge move up, a 70 pip push up. So I would like to see some retracement before I take any entries. So possibly what I would look for is some sort of a bearish candle here. Or possibly if it comes back down to here and then we flip up, that'd be good. Or if we do make a level of resistance again here, that could also be good. But let's play the next candle and see what happens. Oh, we actually did push up, even though we pushed up 20 pips, which is a good move, so you could have caught that. It did close weak bullish. However, even though it's closed weak bullish, there's a chance for us to get a wick fill type entry on the next trade. So a wick fill basically means we look for a wick to go down and then flip and then fill this wick here, this whole wick. And I would aim for 10 pips. I would enter on the flip of the candle. So the flip of the candle would be here. I take an entry, keep my stops below this candle and look for a wick fill. So of course we did not have a flip here. Price actually did do what I said, which is reject and retrace a little bit. So now I will not be looking for any entries until we get another good 30-minute bullish closure at a good time of volume. So now it is 9. Let's keep playing for chart candles. So this is actually a nice little move. When we look left, we do see some areas of concern. This area here, it's a little resistance. So I personally wouldn't take a trade unless we get a closure right here, or at least above it. So let's see what the next candle does. Next candle's gone up. If that's okay with me. Oh, this is a nice candle. So let's see how the next candle plays out. Okay, we didn't quite break above. So we did, but I personally wouldn't enter because even though we had 2 half-an-hour candles closing bullish, they still didn't manage to break this high. So now the only time I look for a buy is if we break this high or we close around that area. So let's just get rid of this, clear up some confusion. So this now is my next area of concern, next area of interest, where I would like to see price breaking above and closing at resistance and breaking above. So let's play out the candles. So we got a rejection, weak bearish close. Not too bad. Oh, this is a strong bearish close. And this, even though it is a strong bearish close, as you can see, it is closing back at this support area I had drawn out. That's why it is key to make sure you draw your support and resistance correctly. So remember how I initially drew my support resistance over here, but then I adjusted it and moved it down because we had a little mini resistance here and a few rejections here. And that is because we saw more taps in that area. So it seemed like a better key level to draw out. And with that being said, now we have closed at support. So we have two things that could happen. We could see price continuing down, closing down here, which would be a good indication for me to take a sell. So if we did get a bearish close all the way down to here, I would sell below here and down to here. Or we could see a bullish closure here. And when we see a bullish closure here, let's just draw it out for you guys. So if I saw something like this, oops, there it is. If I saw bullish closure here, and then another bullish closure here, to be honest, you could enter from here if this high breaks, and then you take a buy all the way up to retest these levels over here. Or you could play it safe and say, no, I'm going to wait for another bullish closure here. Oops. And then you enter as we break above. All right, so let's see what happens with the next candle. Oh, so next candle closed bullish at the support with a huge wick. So this is a 40 pip wick, as you just saw. And with a 40 pip wick and a bullish close at support, this is basically a no-brainer. I would 100% take this trade. I would take this trade to do a wick fill. I'd keep my stops below this current candle, which is about 28 pips away. Of course, I would manage risk every time we did go against my position by 10 pips. I'd close partials. So let's see what happens here. Okay, so we had a wick down and a flip up. It did break past this and go up to make new highs. So let's see, if I did enter a position here and I got put into a drawdown, it would be in a drawdown of 20 pips. So at 10 pips, I'd close half, 20 pips, I'd close another half. But once we came back to this area and flipped, I would have added all my positions back, made it all back, and with some profits. But let's say if we break down to the 15-minute, we can see exactly what happened. Okay, let's go to the 5-minute. Sorry, let's 15-minute. What time was it? So this was 12:45. 5 minutes, 12:40. All right, so this is what price did. Price came down, came up. I was in the position. Price would have, yeah. Well, let's see. It would have come down, and then respected this support and carried on continuing up. So this is why I don't look at the 5-minute. It's just so confusing. No, a price doesn't respect anything. Generally, if you look at a 5-minute, I would say look at it on in a high volatile time when there's a big news event or something happening which pushes the market quite a lot. So now that was a more riskier setup. If we wanted to play it safe, I would say we could wait for price to come up to here close here or close above here. Let's see. All right, so look, we did have price close above this little area here. And remember what I said, if I want to take buys, I would take a buy above here. So my next entry would be here. It would be when price breaks the highs. Only reason I'm waiting for the highs to break is because we did reject this area 3 times now. So, well, this is the 3rd time. And if we break the highs now, I would set a buy stop. I'd aim for 10 pips like usual and see how that works out. All right, so we broke the highs. Next candle also broke the highs. So, I mean, that's good enough for me. That's about 25 pips. And I only aim for 10 pips anyway. For me, 10 pips is 1%. And making 1% a day or 1% in the trade is perfect for me. I hope this video helped anyone with confusion about my strategy and how I trade. So overall, just a brief little recap of how I trade. I trade breakouts and I trade a retest. So a retest would be something like this, comes back down, goes back up. And I just follow the overall trend. I have my daily flip here. So not once did we go below this daily flip area. So today was a bullish day, 100%. And let's just come out of live, and yeah, so charts retracing now, and it's a low volume time. All right, guys, have a good day, and be sure to like the video and subscribe. I will try to post more educational videos on here. Hope this helps. Bye.